Welcome back to Ripple Insider, everyone. Today we've got a massive discussion shaking up the crypto market right now, and it's all about the relationship between Bitcoin and XRP. A pro-crypto lawyer has just sparked intense debate after claiming that Bitcoin and XRP are now showing a shocking 96% price correlation. That number alone has people across the crypto space talking, because for years, many XRP supporters believed the token was slowly breaking away from Bitcoin's influence and building its own independent path. But according to the latest comments from attorney Bill Morgan, that narrative may not be holding up anymore. Morgan says recent data suggests XRP is still moving almost side by side with Bitcoin, and honestly, this could change the way many traders and investors look at the market moving forward. Some people agree completely, while others are pushing back hard, saying XRP has unique fundamentals that make it different from the rest of the market. So in today's video, we're going to break down exactly what Morgan said, why this debate matters so much, how Ripple's escrow system plays into all of this, and what it could mean for XRP's future price action in the weeks ahead. Now, what really made this topic explode online is the fact that Morgan didn't just throw out an opinion without context. He explained that he used an AI-powered data check to quickly compare recent Bitcoin and XRP price movements. And according to his findings, the correlation between the two assets has become extremely strong in recent weeks. That immediately caught attention because XRP holders have often argued that the token's price moves are driven more by internal ecosystem developments, Ripple partnerships, legal clarity, and supply dynamics, rather than simply following Bitcoin. But Morgan basically challenged that idea directly. He said the broader crypto market still revolves around Bitcoin, and when Bitcoin moves aggressively in either direction, XRP tends to react in a very similar way. For traders watching charts every day, this may not sound surprising, but for long-term XRP believers who see the asset as unique, these comments hit differently. Many people in the crypto space have spent years discussing whether XRP could eventually decouple from Bitcoin completely. Morgan's argument suggests that moment has not arrived yet, at least not based on recent market behavior. One of the biggest reasons this conversation became so heated is because of the famous escrow dump theory surrounding Ripple. If you've been in the XRP community for a while, you've probably heard people argue that XRP's price is constantly held back because Ripple regularly unlocks tokens from escrow. Critics claim these releases create supply pressure that keeps XRP from fully breaking out even during bullish market conditions. Supporters of this theory often point to Ripple's monthly escrow activities as one of the main forces controlling XRP price action. But Morgan pushed back against that narrative hard. He essentially mocked the idea that XRP is somehow isolated from the rest of the crypto market because of escrow mechanics. Instead, he argued that Bitcoin remains the dominant force influencing nearly every major cryptocurrency, including XRP. According to him, broader market sentiment, macro conditions, and Bitcoin momentum still matter more than many investors want to admit. And honestly, this is where the debate becomes really interesting, because both sides actually have arguments that make sense depending on how you look at the market. What's fascinating is how emotional this discussion has become inside the XRP community itself. Some investors strongly agreed with Morgan and said anyone watching the charts carefully can clearly see XRP reacting to Bitcoin movements almost every single day. They believe it's unrealistic to expect XRP to fully separate from Bitcoin, while the overall crypto market still treats Bitcoin as the leading indicator for risk sentiment. But on the other side, many XRP supporters argued that correlation doesn't tell the full story. They pointed out that XRP has experienced unique legal battles, regulatory developments, and institutional partnerships that Bitcoin simply doesn't have. In their view, XRP's long-term value should eventually reflect those unique fundamentals instead of constantly mirroring Bitcoin's behavior. And honestly, that's what makes XRP such a fascinating asset in the first place. It's one of the few cryptocurrencies that people discuss not only from a technical or speculative perspective, but also from a regulatory and utility standpoint. Another thing adding fuel to this entire conversation is the current state of the crypto market overall. Right now, Bitcoin continues to dominate headlines, liquidity flows, and investor psychology. When Bitcoin rallies aggressively, altcoins often follow. When Bitcoin crashes, fear spreads throughout the market almost instantly. That pattern has repeated itself for years. So Morgan's point is that XRP is not magically immune to those conditions, even if it does have unique utility or partnerships behind the scenes. And if we're being realistic, there's definitely evidence supporting that idea. Over the years, XRP has had moments of independent strength, especially during major Ripple-related news events. But the broader trend still tends to align with Bitcoin's overall direction. That doesn't necessarily mean XRP lacks value or independence long-term, but it does suggest that market structure still plays a massive role in how prices move day to day. At the same time, XRP supporters are also looking at this issue from a completely different angle. They argue that correlation during short time frames doesn't invalidate XRP's long-term potential. In fact, many believe XRP is still in a transitional phase where utility adoption hasn't fully translated into price discovery yet. They point to Ripple's expanding payment infrastructure, institutional partnerships, and growing discussions around tokenization and cross-border settlement as signs that XRP could eventually establish a stronger independent identity in the market. From that perspective, Bitcoin correlation today doesn't necessarily predict Bitcoin correlation forever. And honestly, this is probably the biggest reason why the debate keeps coming back every few months. People aren't just arguing about charts. They're arguing about the future identity of XRP itself. What also makes Morgan's comments significant is the growing role AI tools are beginning to play in crypto analysis. He specifically mentioned using AI-driven data checking to evaluate the correlation between Bitcoin and XRP. That's important because more analysts, traders, and even retail investors are now relying on AI systems to identify patterns, trends, and relationships in the market faster than ever before. In the past, this kind of analysis might require hours of spreadsheet work or manual chart comparisons. Now, AI tools can process huge amounts of market data almost instantly. That doesn't mean the conclusions are always correct, but it does mean conversations like this can spread much faster and influence public sentiment more aggressively. The combination of AI analysis and social media reactions creates an environment where a single comment can suddenly dominate crypto discussions within hours. Meanwhile, XRP traders are trying to figure out what this means for price action moving forward. If Morgan's argument is correct and XRP remains tightly tied to Bitcoin movements, then many investors may shift their focus back toward Bitcoin macro trends instead of only monitoring Ripple-specific developments. That means Federal Reserve policy, ETF inflows, institutional demand, and macroeconomic data could indirectly become even more important for XRP holders than some expected. Because if Bitcoin continues driving the entire market, then XRP traders may need to pay closer attention to broader economic conditions, rather than assuming XRP can operate independently. On the other hand, if XRP begins showing stronger independent momentum in future months, critics of Morgan's theory will likely use that as evidence that the token is finally decoupling from Bitcoin. Either way, this debate is far from over. There's also another layer to this story that people shouldn't ignore, and that's psychology. In crypto markets, narratives matter almost as much as fundamentals sometimes. When investors believe an asset is becoming independent, unique, or institutionally valuable, that belief itself can influence trading behavior. XRP has always had one of the strongest communities in crypto, and many holders genuinely believe the asset is positioned differently from most altcoins. So when someone publicly claims XRP is still almost entirely tied to Bitcoin, some investors see that as an attack on the long-term thesis surrounding the token. That emotional reaction explains why discussions around XRP often become so intense online. It's not just about price movements. For many people, XRP represents a larger vision about the future of finance, payments, and blockchain adoption. At the same time, even some XRP supporters admitted Morgan may have a point about short-term market mechanics. Crypto remains a highly sentiment-driven industry, and Bitcoin still controls a massive percentage of overall liquidity. Large institutions entering crypto often start with Bitcoin exposure first before exploring alternative assets. That naturally creates a situation where Bitcoin movements ripple across the entire market, pun intended. So even if XRP eventually develops stronger independent fundamentals, it may still remain connected to Bitcoin's direction during major market cycles. That doesn't necessarily weaken XRP's case, but it does highlight how interconnected the crypto ecosystem still is right now. And let's be honest here, this debate also reflects a much bigger question happening across crypto in general. Can any major altcoin truly escape Bitcoin's gravity completely? Over the years, we've seen Ethereum, Solana, Cardano, and many others attempt to establish stronger, independent narratives. But Bitcoin still tends to dominate overall market sentiment. XRP is not alone in dealing with this issue. The difference is that XRP supporters often emphasize utility and institutional adoption more aggressively than many other communities, which is why the expectation of independence becomes even stronger. Morgan's comments basically challenge that expectation head-on. Another important factor here is timing. Morgan said these correlations have become stronger in recent weeks specifically. That suggests current market conditions may be amplifying the relationship between Bitcoin and XRP even more than usual. During periods of uncertainty or macro-driven volatility, investors often move in broader risk-on or risk-off patterns across the entire crypto market. That means assets begin behaving more similarly because traders are reacting to the same fears and opportunities at the same time. So while the correlation may appear extremely high now, it could potentially weaken again during future market phases when XRP-specific catalysts dominate headlines. That nuance is important because correlation levels can change over time depending on market conditions. One thing nobody can deny is that XRP remains one of the most watched cryptocurrencies in the world. Every legal update, partnership rumor, escrow release, or exchange listing still generates massive discussion online. That level of attention alone makes XRP different from many smaller projects that struggle to maintain relevance during difficult market conditions. And despite all the debates about Bitcoin correlation, XRP continues attracting strong interest from both retail investors and institutional observers. That's why comments like Morgan's spread so quickly across the crypto space. People care deeply about XRP's future, and they want to understand whether the asset is truly evolving into something independent or still moving primarily as part of the broader Bitcoin-driven ecosystem. As the debate continues, traders will likely keep watching the charts closely to see whether XRP can break away from Bitcoin behavior in any meaningful way. If Bitcoin enters another major rally phase and XRP follows almost perfectly, supporters of Morgan's argument will probably feel validated. But if XRP suddenly begins outperforming Bitcoin during key Ripple developments or regulatory milestones, the conversation could shift very quickly in the opposite direction. Crypto markets move fast. Narratives change constantly, and investor sentiment can flip almost overnight. That's why discussions like this never really disappear for long. For now, though, Morgan's comments have definitely reopened one of the biggest questions surrounding XRP. Is XRP truly becoming its own independent market force, or is Bitcoin still the invisible hand controlling most of its movement behind the scenes? Based on his recent analysis, Morgan believes the answer is pretty clear right now. But as always in crypto, today's certainty can become tomorrow's surprise. And that's exactly why investors remain so fascinated by XRP and the future direction of the market.